Hey guys, how you doing? This is Tevin from Simple Forex Options. As always, it is an honor to be with you guys today. This video that I'm making for you guys is well overdue. I'll try to make it as quick as possible, but I'm going to be talking to you guys today about which Forex pairs should you trade. Now, I know generally in the Forex markets, what you see nowadays is that people trade the most popular Forex pairs. So you're going to see people trading the Euro USD, the GBP USD, the GBP JPY, the USD JPY, the USD CAD, all of those different kind of pairs. And while that's not necessarily bad, those pairs are very subject to fundamentals and market sentiment, sometimes more than technical indicators. And I would highly suggest, after my experience and years of trading, I would highly suggest to recommend to actually shy away from those pairs. And you want to trade pairs that are a little bit slower moving in pip movement, but they are also more trendier than the other pairs that are the very popular pairs. The thing is, with those pairs, they do have trends, but the trends don't last nearly as long. They're very volatile, and sometimes they can shoot back the other way, then go back down. And the reason being is because they are very subject to market manipulation. And because they are subject to market manipulation, because they are very popular, well-known pairs, and it is kind of known that everybody trades those or will trade those. Sorry about that, but big banks and different kind of Forex investors, they would tend to stick to those kind of pairs. And those are the pairs that they would choose to manipulate. Why? Because they provide the most liquidity. There are way more people that are trading them. And the thing is, when you have these news outlets and these Forex companies and these different kind of things, they're gonna always promote the major pairs that they want to trade or that everybody else is trading. They're going to always promote those pairs, and the reason being is because they want other people to trade those pairs because it's more money for them. If there's more liquid in the Euro USD, the big companies, they want to trade the Euro USD because they want to get that money out of it. But the only way that they can actually get people to trade those pairs is if they can convince people that those are the best pairs to trade. And from my experience, they're actually not. I've gained way more profit trading more lower key, smaller moving pairs that are more trendy. They just move a little bit slower. They're not as volatile and it's not as popular. I made more money trading those pairs than I did all of the other pairs. And the reason being is because they are way more predictable and they are way more subject to technical indicators as opposed to fundamental indicators. Give you guys a prime example. There is a US dollar news event every single day. And I remember I was looking at this. I was kind of shocked because I'm like, bruh, how much news do y'all need? Like, you're talking about high med impact, medium impact, high impact news events almost every single day. And it's like, for people who trade fundamentals, one high impact news event can be going in favor of the US dollar. The next one could be going in disfavor of the US dollar, but then the market starts doing some funky slingshot type stuff. I mean, like, come on now. Like, seriously, you have to come to a point to where you realize that it's kind of shammy. You see what I'm saying? So, in my honest opinion, I tend to not try to trade pairs that has the US dollar in it, that has the British pound in it, because there is tons of British pound news events every single day. So I try not to trade pairs that has the British pound in it, and I try not to trade pairs that has the euro in it. I'm not really too fond of the euro dollar because it kind of mirrors the British pound, but then it mirrors the US dollar, and then sometimes it goes opposite of it, but then it go back to mirroring it. So it's kind of odd how that works out too as well. But it's mainly because those two societies, the United Kingdom and the United States, is so closely engrafted together, although people may not realize it, but economically they are almost attached together because they are very strong allies. Their pairs will almost always have the same kind of news event volume, the same kind of movement, all that kind of stuff. So I mean, I just don't mess with it. I found more comfort trading things like Aussie, Canadian dollar, trading thing, and also there's a bunch of news for the Canadian dollar too as well, but it doesn't really react to the news events that much. But I trade more things like the Aussie Canadian dollar, the NZD CHF, the NZD JPY. And there's a good tool that I think you guys should check out. It's on mataf.net, and all this is pretty much like you'll be able to look up how volatile a pair is on a day-to-day basis, on a weekly basis, and on a monthly basis. So you can have a really good idea. It's most likely it's weekly, but you'll be able to have a really good idea of how much pips a pair moves within a day. So this brings me to my next point when it talks about the risk to reward ratio in regards to the pairs that you want to trade. Because we trade a 3-to-1 ratio, which is, I do not recommend not trading a 3-to-1 ratio. I'll make a video on risk to reward ratios some other time, and I'll make that a little bit more technical with numbers and things like that. But because we trade a 3-to-1 ratio, which means that our stop loss is roughly about 50 pips, our take profit is about 150 pips. I don't want a pair that's moving more than 50 to 70 pips per day. Because if a pair is moving 100 pips per day, and I'm talking about movement as an up and down from the time that it starts. So if it moves 50 pips up this way, 50 pips down that way, that would still count as 50 pips. That would still count as 100 pips of movement in that day. I don't want to trade that pair because I don't want to have to deal with quick stop outs. Now, there are some days that you may get in on the signal. That may be the day that it may have its slight retracement and then continue back down on its trend. What you want to do is you want to stick to keeping the amount of pip movement in a day close to 60 to 70% larger than your stop loss. Not 67% larger than your stop loss. You want to keep it very close to your stop loss, if that makes sense. So it needs to be maybe about 10 to 25% max. 25% max. I would not suggest any higher than that, but it needs to be 10 to 25% max larger than your stop loss. And the reason being is because if in our case, because our take profits are set 3 times higher than our stop losses, we don't want to be stopped out of trades too early because they move too fast or too volatile or too crazy. So they can get our take profit quickly, but that's us hoping and gambling that it doesn't hit our stop loss. So that's not the way you want to trade. So the way I look at it, if you're going to trade it, you want to do it, let's say you have 50 pips per trade, and let's say you want to trade the all JPY, and you realize the all JPY moves about 70 pips per day. If you are in on a pair and it's a trending pair, which I do not recommend trading pairs that are not trending, there's no reason for it. If a pair is not trending, there's nothing you can get out of it. You only need to be trading trending pairs. And there are hundreds of currency pairs out there. You don't have to stick to just 1 or 2 of them. So what I would say is, I'm going to show you this thing on mataf.net. You can actually filter out, after you take out pairs that you want to trade, you can filter out the pairs that are under a certain amount of pip movement per day. After you filter those pairs out, you can pretty much have a large selection of between 15 to 20 currencies that you can look at and choose from based off of strength indicators. And you need strength indicators to actually make this decision. So I use an RSI strength indicator. There are tons of free ones out across the web, so you can use those. But if you use an RSI strength indicator, it'll be able to tell you the pair that's strong and it'll be able to tell you the pair that's weak. Those are the 2 pairs that you want to match up to each other. If those 2 pairs or those 2 currencies, if they are above the amount of pip movement that you are looking for in the markets, which means if it's the GBP JPY that comes out to be the moving pair in which the GBP is strong and the JPY is weak, but that moves 130 pips per day usually. So if you want something smaller, I'll say take it a tier down and find another pair that's maybe matched with a JPY that can give you a little bit lesser movement, but it's still strong or above that midline area. But that's more so on the strength indicator side, because you'll still need that to help you make your decisions. But alongside of that, when it comes to the risk to reward ratio of things, you want it to be about 10 to 25%. So let's say that my stop loss is at 50%. I'm trading the all JPY. I realize that the all is very strong and the JPY is very weak. So the all JPY on average, it moves about 70 pips per day. Now, if it has a bad day, I'm banking on the fact that it's not going to go a whole 50 pips in one direction. I am willing to take that risk that it may move 30 pips in my direction of the stop loss, 20 pips in my direction of the stop loss. Because it's a trending pair, my idea is that it's going to mostly lean towards the side that I chose for it to go to. Now, mind you, because these pairs are slow moving pairs, they may take 2 to 3 to 4 days to finish, because they're not going to move 150 pips in one day. So and sometimes even 2 weeks. If you guys were in the group or notice our stats from last week, we posted 15 trades throughout the month, but there are some trades that took 1 to 2 to 3 weeks to even finish. And they end up finishing towards the end of the month, and it got us a huge surge of profit. Although we were already in profit, it got us a huge surge of extra profit, mainly because they took their time. And it's not about rushing, because I know a lot of people, they like the quick, fast money. It's about getting slow, gradual, sure profits. And if you have a good risk to reward ratio, you don't actually need to have a good win rate. Last month, we had a 40% win rate, but yet we were still 21% in profit. If you do that in binary options with 60% to 70% risk, you would have got an account wipe if you're not risking properly. Your account would have been almost probably completely wiped with that same kind of win rate. Same thing with Nadex. If you're not trading properly, you would have probably had an account wipe. And if Forex, if your risk to reward ratio is a 1-to-1 risk to reward ratio, you would have lost money. You wouldn't have been in profit. So it goes to show you the win rate doesn't matter. The all of this little pretty up stuff that people do, it doesn't really matter. All that matters is your risk to reward ratio and the kind of pairs that you are trading. And if you are trading the wrong pairs, it does not matter how good your strategy is. It doesn't matter. You're trading the wrong pairs. You're probably still gonna lose. So I realized that it was crazy, because I noticed that my strategy wasn't a problem when back in January, when I first started up the premium signals group. The premium signals in 1 month gained 570 pips, which is 57 at the time. It was 57% profit. Which right now we're up about roughly 70% profit after about 5 months of trading. So we're in our 6th month now, and that's amazing. It's mind blowing. So we've been outperforming our standards, because my standard is about 10% average per month, and we're well over that, close to 14 to 15% per month. But like I was saying, back in January, I was trading Nadex and I was trading day trading signals, and I had added on the premium signals, and I had realized that there was something that was different, because I was using the same strategy for all of those signals, but yet the long-term premium signals, which I was at the time, I was only posting 1 to 2 per week. Now I'm actually posting 15 in a month, or 3 to 4 per week. It's about 4 per week. So we're getting like twice as many signals now as we did then, with the same quality. But at the time, I remember the premium signals got 57% profit, but the day trading signals was literally almost opposite of that. It had lost about 20 to 30%, and the Nadex signals had lost about 20 to 30% too. It was a huge disparity between the three, but I was using the same strategy for all of them. And it made me realize that it had nothing to do really with the amount of trades that you take, because I was taking way more trades with those signals than I do with the premium signals. So it's not about the amount of trades that you take, it's your risk to reward ratio. So if you have tight stops and you're not getting a good return on your investment, if your stop losses is the same as your take profits, you're doing a 1-to-1 ratio and bad risk to reward ratio, and you having pairs that are very volatile, that is hitting all your stop losses all the time or taking you out of trades, there's no way you're going to gain profit like that. You need to have sure money, sure profitability, in my honest opinion, and you only need to trade pairs that are consistent, trendy enough to be able to get you that. So the pairs that I stick to trading is things like the NZD CHEF, the USD CHEF. And I don't like USD pairs, but I realize that the USD and the CHEF are almost always opposite to each other. And it's a slower moving pair. That's the only reason why I stick to it. The NZD USD, they are almost always opposite to each other, and it's a slower moving pair. That's the only reason why I stick to that with the USD dollar in there. Alt CAD, Alt CHEF, NZD JPY, all JPY, although all the JPYs in that 70s, it still gives you some consistent trendiness. The all USD sometimes, I don't really mess with that, but it's up to people whatever they choose to do. But the point that I'm making is that there are so many currency pairs out there that you can trade that are trendy and that will also give you the kind of movement that you are looking for in the markets. It's just going to happen much slower. And that's perfectly fine. We saw in January when we had our premium signals that slower sometimes is better. We had way more profit in that month than we've had probably ever in a group from us trading Forex. And it's mainly because we decided to slow things down a bit, to change the trades that we were trading, and to alter our take profits and stop losses so that we're getting a 2-to-1 to a 3-to-1 ratio. I actually suggest a 3-to-1 ratio, and I do not suggest you investing more than 2.5% per stop loss. It needs to be capped off at that. And your take profits, of course, you want to keep them around 7.5% or 10% return per take profit. That's really going to make you a lot of money if you have a decent strategy. So, I mean, just please keep that in mind, guys. Be vigilant and wise in your trading. Also, another thing to note, too, as well, the Trend Racer, you guys can find it on my website at simpleforexoptions.net. But the Trend Racer is it's a beautiful indicator. I've been using it last month, and that's how last month we got 430 pips of profit. It was really because of the Trend Racer. And you can actually buy it or you can rent it, whatever is most conducive for you. But it is a beast of an indicator, especially for those who are looking to trade on their own or want to trade on their own. It is a beast of an indicator, dude. So I would highly suggest going to go get it or to purchase it. The link is in the description. The link to all of Simple Forex Options products is in the description of this YouTube video. And I may post this video on Facebook too as well. But the link is in the description if you guys want to check it out. But I mean, be honest with you, it's a great indicator. There's a video of me kind of explaining it and walking it through. I created it last month, and it was created from my own hands with my idea about, like, it's based off of my own strategies that I've used over the years in the past. I just coagulated a bunch of good things, put them together, and I put some really strict good rules up there. And it, of course, it shows you take profits, shows you stop losses, it shows you where to enter, it shows you where to exit, all of that. Of course, it's your decision. I don't want to make it an expert advisor because I like the fact that people can still make decisions themselves. So if you use it in coagulation with other things, dude, I mean, it'll be amazing. Make you so much money, you'll be like blown away. So that's my personal opinion on that. I don't want to I let other people boast in the product or let other people praise it. But it is in stores if you guys want to find trendiness or trendy pairs or catch trends on pairs early on, because that's the most thing that Forex traders fail or struggle with. They have a hard time finding trends when the trends are actually about to happen or when they're happening. So the Trend Racer is there to try to get you in on a trend as early as possible. And it's self-correcting. So if it makes a mistake with the direction of the trend, it'll get you out of the trade and then get you back in on a proper side of the trend. And that's just beautiful. I mean, there's no way that you can really replicate things like that. It's a beautiful setup. So go ahead and check that out if you guys feel so inclined or interested in that. I don't know. It's your own honest opinion. But like I said, guys, be mindful about the pairs that you are trading. You don't have to go to the big name currency pairs. You can always stick with the simple, small stuff that gives you the kind of movement, the kind of volatility, the kind of right things that you actually need. You can stick to that and just only trade pairs that's trendy. I have about 8 currencies on my charts at a time, but I'd switch in between 15 to 20 currencies. I don't trade anything outside of those. And because I'm only posting one signal per day, I can post a different currency every single day for a whole month and not trade the same pair. Now, I tend to trade the same pairs throughout the month because I only target the trending pairs. But I change my pairs every single week depending on how the markets look. And like I said earlier about the strength indicator, you want to make sure you get a good strength indicator so you can tell which pair is strong, which pair is weak. That way, if you see which pair is strong, which pair is weak, you know which pair that you need to be trading because that's the pair that's going to be trending. And I have a video on my YouTube channel talking about strength indicators and all that kind of stuff. So guys, please check that out. That's very simple, very easy to use, but a lot of people don't use it. I don't understand why, but you need that a part of every trading strategy. You need to know the strong pairs versus the weak pairs, and that'll get you in on those trends early too as well to be able to help you out. So like I said, that's all that I have for you guys today. I don't have anything else. Hope that you guys enjoyed the video. Thank you guys always for tuning into Simple Forex Options. If you guys want to subscribe to any signals, any copy trading or auto trading signals, not signals, but auto trading, I mean, just trading for you, or buy the Trending Eraser, or get my ebook, or even a free educational group, and also have a newsletter that you guys can subscribe to that I'm going to begin to send out the the weekly recommendations to. If you guys want to do all of that, you can find everything on my website at simpleforexoptions.net. And it's easy to find there. So thank you guys for tuning in. I hope that you guys enjoy. Please be vigilant and wise in your trading. Don't be greedy, rushing for money, dude. It's not worth it. Take your time, be patient, and let the money and let the strategy and everything, let it work for you. And don't be so hasty. Just take your time. And that's the reason why I made my Signal service as cheap as it is. I know $45 to some people may sound like a lot, but dude, Signal services nowadays are extremely expensive, and the quality of them is not always even that good. So there you're paying sometimes $100 a week or $100 a month, and mine's is actually half of that. So like I always suggest, if you want cheap, good quality signals, free education, because people make you pay for education. They make you pay like some of these stuff's like charge you like $100, $200 for educational sessions and like little teaching you stuff. All of my education is free. You can find it on my YouTube channel, and I also have a free educational group. You can find it there too as well. All of it is free. You don't have to pay for anything. But that's all that I have for you guys today. Thank you guys for tuning in to Simple Forex Options. It's always an honor to have you guys with us. And if you guys want to message me, it's not like other services to where you're talking to a random person, or because you can all talk to me personally. I don't care how many groups I have. I would try my best to always communicate with all of my customers, people who have questions, who need assistance. I will be there, and I can be able to talk to you in my own time, of course, because I'm just one man. So, like I said, thank you guys for tuning in, and please follow my Facebook page. We have about 19,000 followers on my Facebook page and counting, so please follow that. You can get updates, important announcement, news, all of that kind of stuff. So thank you guys for tuning in. Hope that you guys enjoy. I know I said that a couple times. Simple Forex Options.